Inside America's Boardrooms, the informational show for board members and corporate secretaries. Brought to you with Knowledge Partners, Diligent, PwC, Center for Audit Quality, the Conference Board, and Corporate Board Member. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, Donnelly Financial Solutions, and the Society for Corporate Governance.
Welcome to this edition of Inside America's Boardrooms. I'm TK Kerstetter, the CEO of Boardroom Resources and the co-founder and editor-at-large of Corporate Board Member Magazine. And we're here in the New York studios of the Conference Board. Today's topic is going to be an interesting one. It's board oversight of new technologies and resulting disruptions. And joining me is someone who I consider somewhat an expert in this space, is Sheila Hooda, who's the board member with Mutual of Omaha Insurance Company and Virtus Investment Partners. Welcome, Sheila.
Thank you, TK.
So this topic is turning out to be a pretty popular topic. We don't want to sort of necessarily send alarms, but it's certainly things that everybody should be aware of. And I thought we better first define sort of what we're talking about. When we talk about the disruption, there's digital disruption, market disruption, regulatory disruption. There's probably more, but help us define the disruption that boards face.
Definitely. TK, as you've said, it goes without saying that we are seeing massive disruption, and at a scale we have never seen before, and it's only increasing. And this disruption is across businesses, across industries, across business models, and brought about by a confluence that is digital and technology, market, regulatory, and consumer preferences, changing dynamics of demographics, etc. However, with this whole tsunami that's going on, it is technology that is really the most significant disruptor. And it goes beyond just artificial intelligence, augmented reality, blockchain, cloud services, next-gen automation, sensors, cognitive technologies. The list is endless. And the impact, the disruptive impact that this is all having, the whole technology, digital space, is huge. Just as a step back, today in business circles, technology is no more a supporter or enabler of businesses. It is the driver and the differentiator. Every business now is a technology company, and then they sell their specific products through technology. So all this makes technology the heart of the business, but it also brings with it opportunities and risks. Now, companies that do not change their strategies, do not innovate, and do not move fast enough to keep pace with all this disruption, lose their competitive advantage. They could literally go out of business. Now, to answer your question with this preamble, what is the implication for boards? As we know, boards, their fundamental responsibility is to enhance and maximize shareholder value for the long term. Therefore, boards' responsibility for dealing with disruption lies in this reality and this principle. So as business disruption threatens the very sustainability of companies, it is what I would say very strongly a core fiduciary responsibility of the board to manage, navigate, and mitigate the risks of disruption to the companies they oversee. Huge, huge focus for boards. As a result, to discharge their responsibilities in this new environment, boards need to evolve their processes, evolve their priorities and practices. with a level of what I would say urgency so that they remain relevant and they can pivot and future-proof the companies they oversee. Boards set the tone from the top for management and for the company, and embracing this change, managing the risk, and fostering innovation-led growth, as I will talk about a little bit, during this full tsunami of disruption, is the only way they can empower their companies and succeed in this environment. So boards now have a whole new, broader role to play in this disrupted environment. As we know, high performance governance leads, it does not follow. And therefore, for organizations to survive in this escalating disruptive environment, boards must heed this clarion call for board reform and board refocus.
So I would agree with you 100% that when you think of disruption and you look at the realities of disruption, that technology is sort of leading the way. A lot of companies are on top of that. Too many companies have not had those discussions in their boardrooms. Part of the challenge that's interesting about this is that these are not disruptions that most of the board have experienced in their careers, okay? These are new types of disruptions for people that are used to disruptions but not used to these kinds of disruptions, okay? So when I think about all that, that leads me to the question is, what is the role of boards in doing this? Okay, you mentioned part of that, but how can they specifically be part of the solution so that in fact their business doesn't competitively get behind their competitors, or worst case, as you mentioned, go out of business? So what can they do specifically?
Well, that's a huge new big role for boards. And as I've said and laid out what I call this new board governance imperative and the clarion call for renewal, what should board do really to reshape their roles? You know, embrace change and disruption, foster innovation and growth, manage risks. And I would recommend 3 broad areas for board renewal, board refocus. So let me itemize them and then I will sort of go deeper into them. The first is board oversight of a forward-thinking strategy which is holistically and deeply integrated with technology, innovation, risk, and culture. All these 4 points. So it's a holistic approach to the strategy, discussion, and agenda. The second would be board oversight of human talent and human resources, human capital, I would say. Often overlooked, but this is something that should come upfront and center. And the third suggestion I have is a completely new model of board management engagement and a shared responsibility to lead through disruption and innovation. Within this whole holistic strategy discussion is the culture of the company, the risk-taking culture that needs to be established. We know culture as defined as shared beliefs, values, and expected behaviors. However, in this disrupted environment, with so much change, boards will need to think from going beyond a step-by-step evolutionary approach to change and innovation to perhaps something more dramatic, to something more breakthrough. But this will come with a whole new set of risks because it's an unknown sphere. And whilst it is difficult to predict the outcome from testing innovation, and you may have the best digital and analytics to give you insights. It ultimately comes down to gut experience, some sensing of the markets. And therefore, fostering a culture that is receptive to risk taking and failure, and it's a critical aspect of board governance. Management needs to figure out a way to work with risk, take risk, learn from risk, fail fast, and then move forward if it doesn't work. But that needs to get embodied in an acceptance of this risk-taking culture, that failure is okay, we are trying something new, we are going into an unknown path, it's okay, learn fast, move fast, that's the way to go on. And the fourth point, again within this strategy holistic approach, is measurement and metrics. Too often organizations are not prepared to define their, or do not define their readiness for disruption, readiness for risk-taking, readiness for innovation. And if they do, it is normally about metrics like percentage of new products introduced over the past year, percentage of revenue generated from new introductions of services and products. But what I am recommending is a broader, deeper approach to how you measure this readiness for disruption. And it could be something that is the amount of time spent on innovation, the amount of time spent on experimenting, thinking, brainstorming, and not just with a product group, but across the entire organization. So it's broader and deeper, and this spirit of dealing with disruption, being prepared for disruption, innovating, making something break through, gets embedded as part of the risk-taking culture of the company. So to recap, in this change world of disruption, it's the board's fiduciary responsibility to deal with it and address it. And three primary ways are a holistic approach to strategy, incorporating technology, risk, and culture, a refocus on the human capital and talent agenda, and lastly, a new model of board management engagement with greater dialogue, transparency, and trust.
I hope that you will have sent a good message here, and I want to thank you for taking the time and joining us. And that will conclude this edition of Inside America's Boardrooms. We hope you enjoyed the show. We'll be back again next week to take another look at a critical topic that'll help you be a better board member or committee member. So we'll see you then.
Join us again next week for Inside America's Boardrooms. Brought to you with Knowledge Partners, Diligent, PwC, Center for Audit Quality, the Conference Board, and Corporate Board Member. Along with content contributors Equilar, Meridian Compensation Partners, Wilson Sonsini Goodrich and Rosati, Donnelly Financial Solutions, and the Society for Corporate Governance.